Taxes. Picture this: you've just had a hard month at work, flipping burgers at your local McDonald's. You're in bed when you get an email saying you've been paid $2,000, but your bank account only shows $1,456. You scroll down the pay stub. Federal income tax. State tax. Social Security. Medicare. This is the modern ritual of giving away a chunk of your money to invisible forces, and they expect you to say thank you. Here's the truth: taxes are the cost of civilization. You pay, and the government builds roads, funds schools, checks if your favorite taco truck isn't infested with rats, and sends billion-dollar missiles to places you've never heard of. There are different types of taxes. Income tax hits the money you make. Sales tax hits the money you spend. Capital gains tax hits the money your investments make while you're asleep. Almost everyone also pays Social Security tax and Medicare tax. Social Security is basically forced retirement savings, money you get back later. Medicare is a health insurance tax for elderly people and those with serious conditions. Then comes filing your taxes. The government already knows how much you owe, but makes you guess. If you're right, cool. If you're wrong, you're cooked. Some people pay taxes quarterly, some yearly, and some don't pay at all and end up starring in documentaries. Taxes are annoying, sure. But countries with higher taxes usually have a higher quality of life overall. Banks. You walk into a bank, hand over your money, they smile and say it will be added to your account. You walk out thinking it's now sitting safely in a giant vault guarded by a dragon. In reality, that money's already gone. Most people think banks just store your money, but they're really middlemen for financial transactions. When you deposit $1,000, the bank keeps a small portion and lends the rest, maybe to someone who wants a jet ski. This system is called fractional reserve banking. It works because they assume not everyone will withdraw all their money at the same time, unless it's 2008, of course. Banks make money by lending your money at a higher interest rate than the interest they pay you. You're the supply of money, borrowers are the demand. They encourage you to deposit money because it's easier to use a card than carry cash. They pay you interest. It's safer. In the US, deposits up to $250,000 are insured by the government.